EOH reported a 35% rise in first half headline earnings per share to 171.5 cents. The increase being attributed to both organic growth and recent acquisitions. Let's take a quick look at what we can expect from this company now moving forward. And joining us for that discussion is the company's CFO, John King. John, thanks so much for joining us this morning. Let's get straight into the numbers. I've gone through some of the headline figures there. In line with your expectations for the first half?
I think very much so. We've been trending towards increasing our services revenue, and that's up by 60%. So we're sitting at about 1.7 billion on services. But both our software and our hardware businesses have also increased. So overall, we've had a 45% increase in our revenue, and profit after tax is up by over 50%. So you are very much in line with what we expected.
As you mentioned, your services business is still directing or contributing to the real growth that the company is seeing right now. I mean, taking a look at the kind of services you're providing to clients, a recap for us first of all what you're exposed to and just how competitive environment you're working in right now.
Well, I think overall, in terms of the services, we have a broad range of services, right from the consulting side right through to managed services, through the implementation of various different applications in the market. And that's obviously, we're basically a technology and service-based company. I think from a competitor point of view, I think all the competitors out there are our competitors. I think what we do, I think our strength is our ability to deliver. So we, I suppose, maybe under promise and over deliver, and I think that's being recognised in the market.
Where you are delivering, that's one point. Let's take a look at what price you're delivering that product at. I mean, what kind of pressure are you experiencing on the margin side of things right now?
I think from the margin perspective, we're very steady. In fact, our gross profit margins are around 42%. And our overall margins are about 10%, 9.9% in fact, which is basically in line with our range of between 9 and 10. I think the EOH way is to do things right the first time, and we have a quality program. And I think in our industry, as long as you don't do rework, the margins are fairly reasonable. So I think as a result of making sure that we deliver right first time, the margins are basically steady.
Well, still with me at the desk this morning is Paul Hansen of Stanlib. And Paul, you've got a question for John.
Yes, John, I mean, that's a fantastic growth in revenue. So you must be taking market share, I mean, surely, because no one else is showing those sort of revenue growth numbers.
Yes, we are. I think we're taking it, primarily from our clients. I think a lot of work's being outsourced. So a lot of our clients are now realizing that a company like ourselves can do the IT services better than they can, or at a cheaper rate than they can. So what we're doing is taking, I suppose, the market share in terms of the overall market from our clients. Our clients are outsourcing to us. And yes, we are taking some of the work from some of our competitors, and we're growing in the public sector. It's been an area we haven't been hugely involved in the past, but we've been growing that steadily, and now about 25% of our revenue is from the public sector.
And the clients that you're taking business from, in other words, they're outsourcing to you, is there a particular industry or is it across the board?
It's basically the upper end of the enterprise market. So it's not the big banks and the big telcos, but it's really the chemical industries, the petrochemical. We've done quite a lot of work there, the manufacturing. So the those companies that are about 10 billion to 15 billion rand turnovers, that's where we're basically getting most of our work from at this point in time in terms of the outsourcing.
And you've been doing this fantastic growth rate for something like 13 years, you mentioned.
Well, since inception, we've been growing at an average rate of about 44% per annum.
Sure.
We don't see that slowing down hugely, although there is more organic growth now than there has been in the past. So this year particularly, only 25% of our growth was from acquisitions and 75% from organic growth. And our market share overall is still fairly low. If you consider it, our addressable market is about 200 billion. EOH is around the 5 billion per annum sort of revenue. So we're still a small player in terms of that. So there's still lots of legs in this business.
So a lot of scope to grow, and you can clearly see that Paul is impressed by the kind of performance you've put on, John. Taking a look at the strategy moving forward, more exposure to public sector work as opposed to private sector work. Take us through the rationale there and how much risk you then bring into your stable.
I think from a public sector point of view, I think what you're trying to do is make sure that not only do we deliver a good service, make reasonable returns, but also do good for the country. We need to improve service delivery in the public sector, and government needs that. They're falling behind in terms of technology. So they need companies like ourselves that have the know-how, the organizational ability to get involved in government. And what we found is if you contract correctly with government in the public sector, so you know how to operate in the public sector in terms of the contractual way, the milestones, how you do the billings, etc., you will get obviously your fair share. We've had no write-offs in government at all. It takes a little bit longer. We've seen a slight deterioration in our debtors' days, by just 3 days, because they do take a little bit longer to pay, but they do pay. And I think the fallacy is that government doesn't pay. If you deliver, government pays. And
do you find when they're outsourcing to public sector and these other companies you were talking about, these enterprise companies, do they actually cut costs in that sort of sense? Not only getting more efficient work from you guys, but also cutting costs on their side, or is it a wash?
Look, there is a slight saving in the first year, and then obviously consecutive savings over the next number of years in terms of cost savings. But essentially what they're looking for is a company that can deliver more for the same. In most cases, we take over their staff. Into EOH, and obviously we would augment it with our own staff.
Let's take a look at the kind of skills or human capital you're exposed to right now, because you've embarked on a job creation initiative specifically, and that was one of the highlights of the budget speech this year as well, where we had the finance minister highlight that tax incentives will be given to companies that employ first-time job seekers. Take us through that job initiative and the kind of skills pool you actually have access to.
Okay, that is a huge initiative, and I'm glad you asked that question, because it's a big drive within EOH. Last year we took on 620 interns into the business, so there were half graduates and half matriculants. Most of those are now being placed within EOH and the balance at our clients, and we'll be repeating that again this year. Obviously there's a focus on those students that have maths and science as a core, and we also have our own initiative where we sponsor the Maths Science Centre, or the Maths Centre, which teaches teachers to teach maths. So it's at quite a high level. It's obviously in the technology space. We're trying to agitate the market, our competitors, the rest of business, to create jobs. There are incentives. In fact, this year alone, the 6 months, there's almost 5 million rand tax relief as a result of that. And really the quality of the young people that are coming on board is fantastic.